What's up, truck drivers? It's Kenny again. Tried to make this video the other day, and there ended up being some inaccuracies, and I wasn't exactly clear on some things, and so I want to try to make it again, and I'm going to replace that video with this one. So we're going to talk about something a little bit different today. We're going to talk about your retirement as a truck driver and how, what's the best way to grow your money for your retirement, all right? May not be a super, fun topic, but I think that there's, that a lot of people have fears associated with things like the stock market and don't really understand what the best ways to grow their retirement is. And we're going to talk about it today. So I'd like for you to hit the subscribe button, guys. Be a subscriber. If you enjoy this video, hit the like button. Help me start growing this channel and, getting some momentum going. And I appreciate if you do that. So let's talk about this topic. So, first let me say I'm not a financial advisor. I'm just a truck driver. But I am a smart guy. Now, I may have a Texas accent, may sound like a hick to you or whatever, but I'm a smart dude. I got a high IQ, and, I did a ton of research about this before I started on my journey. And I want to just, give some of that to you free of charge, you know what I mean? A way for me to give back. So, I'm 46 years old, which means, I got roughly 20 years to save for retirement. I haven't really made any provisions for my future. And about 6 months ago, I decided, I really need to get on top of this, or else I'm going to be screwed when I get old, because Social Security just simply ain't enough for anybody to live on. And so I started doing tons of research, right? At first, I was researching just retirement, and what the best ways to do that is. And what I found was something called a Roth IRA. Now, we all know about the 401k, and most of our companies, especially if you're a company driver, have a 401k, and they have some kind of a matching program where they match your contributions up to a certain level, all right? But a 401k is not really the best way to save for retirement. It's not even not really. It's not the best way to save for retirement, all right? And we're going to get into the differences between a 401k and a Roth IRA, and we're going to get into, what financial planners will tell you, okay? Because I watched a lot of videos and did a lot of research about this, all right? And what the financial planners will tell you is that the Roth IRA is the way to go. They'll tell you this. They'll tell you, enroll in the 401k, all right, and put just enough money in there so that you get the free money that your employer is offering. So my company has kind of a crappy one. They match 25 cents on the dollar up to 4%. So I put 4% into my 401k just so I can get that free money. But after that, they will tell you that you need to be maxing out a Roth IRA every year that you can. The maximum amount that you can put into a Roth IRA is $6,000, all right? If you're over 50, you can put $7,000 in it. But for most of us, $6,000 is the most you can put in there. Now, if you make $60,000 a year, that's 10% of your income. Now, if you're wanting to get real hard and heavy and you max your Roth IRA out in 7 months, you can always go back to that 401k and say, I want to up my contribution for the rest of the year so that you can save more than that. But before, like I said, you need to max that Roth IRA out if you can every year. And here's why, okay? there's multiple reasons why. Okay, we're going to talk about a few of them. So first of all, with a 401k, here's how that works, all right? Your company sets up the 401k, and somebody from your company goes into it, and they select a number of mutual funds. This person may or may not know a fucking thing about the stock market, okay? They may or may not really know what they're looking at. And they go in there and they select a certain number of mutual funds, maybe 10, 15, whatever it is. And inside of your 401k, those are the things that you are allowed to invest in. And those are the only things that you're allowed to invest in. If your company has 15 mutual funds, you can control only to the point that you decide how much of a percentage goes into which one of those mutual funds, all right? Now, a mutual fund is a group of stocks, and every time you put money into that fund, it spreads your money out across that group of stocks, okay? And what that does is it diversifies your money so that if one of those companies fails, because it's spread across a whole lot of companies, if one of those companies fails, your money's still relatively safe. With a Roth IRA, you can invest in whatever you want to. You can go invest in that same mutual fund that's in your 401k, or you can go look at ETFs, which are similar to mutual funds in that they are in multiple stocks, one fund. And you can go find mutual funds that, that target specific industries and stuff like that. Or you can just put money in Coca-Cola. You can just put money in Tesla. You can invest in whatever you want to invest in a Roth IRA. All right? So, choice and flexibility is one benefit, okay? And it's a big benefit. Another benefit of the Roth IRA is that it's tax-free, okay? So, in a 401k, you put your money in there before taxes, and they will tell you, oh, well, it's good because you don't pay as much taxes out of your check and whatever, okay? But here's the problem with that. Your money goes in there before taxes, and if you put $10,000 in there, let's just, as an example, we're going to use that because it's a round number. If you put $10,000 in there, and you turn that $10,000 into $100,000, every time you take a disbursement after you retire, you got to pay taxes on that disbursement. So if you turn that $10,000 into $100,000, and the tax rate is just say 20%, you're only getting $80,000 of that 100 grand. Okay, but with the Roth IRA, you put your money in there after taxes. So I have my bank account linked to my IRA, and I put money directly in there. I've already paid taxes on it. So in that same scenario, if I put $10,000 in my Roth IRA, and I turn that $10,000 into $100,000, when I retire, I get $100,000. I don't have to pay a cent of taxes on that. And that is a huge benefit. I mean, like, not only do I get to choose what I invest in, but then when I'm done and I retire, I don't have to pay no taxes on that. If I make $500,000, I get $500,000, not $400,000 or whatever. And that's a huge advantage, okay, guys? Another advantage of a Roth IRA is that you can use it like a savings account, okay? Give me a second here. So over the years, I've had some 401ks with different companies, and I always tended to end up pulling it out. I was still young. I didn't care about retirement. So I would pull that money out. And when you pull money out of a 401k, they take penalties and taxes and all kinds of stuff out of that. So you may have, $6,000 in there and only get $4,500 because of all the penalties and shit. Okay? But with a Roth IRA, if I put $4,000 in there, as long as my account is, as long as my account is up and not down, I can sell my stocks and take that $4,000 back. I can hit 3 buttons and that shit will be in my bank account in 3 days. No taxes, no penalties, no nothing. Okay? So, like, if I think about where my account is at right now, I've been saving in my Roth IRA for about 4 months, and I've got $4,000 in there of my money, and that account is worth $5,300, $5,280 something. Okay, so I have made over 25%. I've increased my retirement account, probably getting close to 30% in 4 months. In 4 months, all right? So if I was to decide to take money out of that, I could sell all my stocks, take my $4,000 out, and I'd still have $1,300 in there to trade with. Now, let's talk about that, all right? So in a 401k, financial planners and stuff will tell you, if you're in good mutual funds, you can expect over a 10-year period to average somewhere between 5 and 7% per year, okay? So if you got $10,000 in there and you get 5%, you increased your account by $500 on $10,000. Does that sound like a real great way to grow your money? I mean, I know there's compounded, it compounds. So if you get $500 that first year, then your account's worth $10,500. So the next year you get $1,050. And if you let that go over a long period of time and you keep contributing to it, it will add up. It will add up pretty significantly. But here's the thing. I made almost 30% in 4 months. In 4 months. I mean, you're talking about 5 times more than I would have made in a year in a 401k that I've been able to do in my Roth. Now, I'm not saying I'd be able to do that every year. You know what I mean? I'm not saying that that's, that you're necessarily going to do that. But I will say that it is not hard to beat that 5% return. If you just make some smart decisions and invest in targeted ETFs towards the right industries and stuff like that, you can easily beat that 5 to 7%. It's not hard. I've done the math, I've looked, I've done the research, and it's not that hard. Now, a lot of people have a lot of fear associated with the stock market. They're scared of the stock market. Whenever I talk to truck drivers and mention the stock market, they're like, "Oh, I'd never put any money in the stock market. That's how you lose all your money," but blah, blah, blah. That just doesn't make any sense to me, okay? Like, they're always like, Biden and the coronavirus and the stock market crash. Since when did anybody ever make any money on the stock market only put money in it while it's up? You're supposed to put money in it while it's down, and it's down like right now, big time. Like, now is the time to be dumping money into it. Yeah, if you think I'm wrong, if you think that that's not the case, go look at a 10-year chart of the stock market. Just go to Google and type 10-year stock market chart, okay? And look at like an S&P 500 or a NASDAQ, which is kind of tracks the whole stock market, or sectors of it anyway. And when you look at something over a long period of time, okay, like that, you'll see that, yes, there are ups and downs. You'll see the chart go up and down. But the whole time it's going up and down, it's going up. So if you look at 10 years ago and you look at today, the chart has gone up. It goes up and down. You lose and win and lose and win, but you don't lose anything until you sell it. And it always goes up over the long term. Like, it always goes up over the long term. That's all there is to it. And that number, the NASDAQ, S&P, Russell, whatever it is, that's like a mutual fund. It tracks a whole bunch of stocks, okay? Now imagine if you could invest in some of the stocks that do better and not invest in some of the stocks that do worse. You're going to do even better than that curve. And that is not difficult to do. There are companies out there that are stable, and you're never going to lose money on. All you got to do is do a little bit of research and decide where you want to go with it. Now, as a truck driver, let's talk a little bit about more of an active strategy, all right? Because that's what I do. I have some ETFs, which are basically the same thing as mutual funds, that I put money into in certain industries that I think are going to take off in the next 10 to 20 years. And the world knows that some of these sectors are going to take off. And so there's virtually no way that you're not going to way outperform the stock market over the next 10 years if you invest in something like, let's say, solar energy. Solar energy is set to grow exponentially over the next 10 to 20 years. Same thing with electric vehicles. Electric vehicles are set to absolutely explode over the next 10 to 20 years. There's no way that these two things are not going to. They are definitely going to far outperform the stock market in that 5 to 7% over the next 10 to 20 years. That's just all there is to it. And so I have a couple of ETFs, one that's in solar and one that's in one that I do is in technologies. It's a disruptive technologies one. But those I expect to perform really, really well over the next 5 to 10 years. Okay. Will they go down? Yes. Will they go up and down and up and down? Yes. But over the long term, I expect them to grow way more than that 5 to 7%. And you can do it that way, okay? But then the rest of my money, I do more actively traded stuff. And as a truck driver, like you're in a unique position as a truck driver, okay? Most people got a 9 to 5, they go to work, come home. You know, they don't have a lot of time during the day while the stock market's open to watch it or to mess with it or to worry about it, okay? As a truck driver, you're driving down the road all day. You know what I mean? Like, you have a lot of, like, technically free time while you're driving that you can kind of keep an eye on the stock market, on your stocks. You get a little program, you make you a watch list, you start to identify stocks that you want to keep an eye on, put them in your watch list, and while you're driving down the road, you can look and see what they're doing. If you've got a Roth IRA, you know, you can do this on your phone. I have a tablet, and I set my tablet up so I can look at the stock charts and stuff while I'm going down the road. I pay a couple of dollars a month so that I can get live charting. And then if I want to buy or sell something, I just pop up with my Fidelity on my phone and do it. And I'm able to do this while I'm driving down the road. Most people don't have that benefit. Most people can't just sit there and kind of eyeball the stock market or whatever. And the truth is, you don't have to if you use ETFs like I'm talking about for more long-term stuff. But I also do shorter-term stuff. And that's how on Monday I made $900. I made $900 on Monday because I picked a stock, which was a movie theater stock, and I picked it specifically because it's way down because of coronavirus and it's closed. And I did research and determined that this company has enough cash on hand, they have enough money to where they can stay closed for the whole year next year and not go bankrupt. And that's what you have to do. You have to determine, you know, is this company, because they're required to put their financials out. I mean, they're required to tell you like how much debt they have, how much earnings, what they're, you know, every quarter. All these companies that are listed on the stock market put all this information out there by law. So it's not hard for you to find the information. So anyway, this company, I saw that they're going to be around for at least the next year. And, you know, it was Cinemark, ticker symbol CNK. And so I waited, I watched it. That's something that you have to do with these stocks. You've got to keep an eye on them for a while before you buy into them. Look at how they behave. You know, get a feel for what's a high point and what's a low point. So Cinemark, before the coronavirus, was trading for around $40 a share, all right? And I looked at, when I first looked at it, it was around 12. And I waited and got in, and then when it went down some, I bought some more. And actually the the second time I've sold. I sold once for about a $200 profit a while back, and then I ended up buying back in, averaging down, and my cost on the 200 shares that I bought was about $9.50 a share. And I did that because I knew that the coronavirus was going to be over. It's going to be over. Now, when it's over, that stock's going to come back up. So what happened? Monday, Pfizer released the news story and said that their third stage vaccine trials were 90% effective. In a matter of hours after the market opened, Cinemark had shot up to $14. Now keep in mind, they're not even open. Like, this is just investors saying, oh shit, here, it's going to come back. And it skyrocketed. And I sold it for, it's like $13.80. It was close to $14 a share. It went all the way up to $15. And, I missed the boat there, and I sold it around $14. And I made $900. I had $1,800 and something invested in it. And I made another $900 on top of that and sold it. So then, all of my stocks that day were way up, so I sold them. I sold everything. And then I saw another opportunity on an electric vehicle stock called NIO, N-I-O. It had shot up, and so I watched it. This was the next day. I watched it. I waited for it to dip way down, and then I bought. It was like 28 shares I bought of it at $40 a share. Shot back up, sold it at 48, made another $220. So basically, over all those sales just this week, I made like $1,300. And I've lost money too. Okay, I've lost money in the market too. When I first started with this, I thought I was going to be slick and trade some of these penny stocks. And I'm just going to tell you right now, stay away from them. Stay away from the penny stocks. You'll see a lot of stuff about people doing it. And in your head, the math is like, well, it's only like 30 cents a share. I can buy a bunch of shares, and then if it goes up, I'll make a bunch of money. But just don't do it. It's not worth it. There was a time when I lost like $400 or $500 on one. And there was another time that I lost a couple $100 on one. Until I finally got smart and decided not to do that no more. So when I say that I've increased my Roth IRA by like almost 30%, that's including those losses. So, like, I had some losses that went down, and my account was down at one point, and I've been able to climb all the way back and go up 30% of my initial investment. And that's just in 4 months, guys. So do a little research about it. Think about it. What's the best way to grow your retirement? I mean, maybe you don't want to trade stocks, and I can understand that because it is risky. But going into more targeted ETFs and better mutual funds than what your company may pick is a much better way to grow your retirement than using these 401ks. Not to mention the fact that you don't have to pay taxes on it. So I hope this has been helpful. And if you'd like to hear more about my journey in the stock market and like my ideas about how to make money in the stock market and stuff like that, let me know in the comments, and be sure to hit the like button if you like the video, and give me a subscription, guys. Hit that subscribe button because I'm trying to grow this channel. So I hope that was helpful to you. Thanks for watching. Keep on trucking.